special guest with us, Mr. Brad Sumrok. The topic today is apartment investing in 2021. He's also going to tell you about his 5-step framework to his program. Brad also has a big event coming up on March 19th that he's going to share the details with about. And it is called the Rat Race to Retirement. So I know that we're all very excited to hear about those topics and hear what Brad has to tell us today. But before we get into that, I just have a few slides to share with us to tell you a little bit about Quest and what we do here. So give me 1 second to share my screen and we will get going. All right. There we go. Can everybody see the screen?
Yep, all good.
All right, perfect. So, who is Quest and what in the world do we do? So, we are the largest self directed custodian in Texas. We have over 20,000 active clients across the country. We are able to serve all 50 states, so that's awesome. We have 2 billion under assets under administration. We do act as the custodian. We have over 100 employees. We have 34 certified IRA certified service professionals. These employees do have to have 2 years in the business and take a pretty arduous test after those 2 years called the CISP, giving those people that special designation. And we do have a good bit of employees, not even just in the IRA specialist world, but in our transaction teams as well, making sure that we are all here for you and ready to go. Special training for that. So that's something that Quest can offer. Quest is a private, we invest in private assets, things like real estate, notes, private entities. So nothing publicly traded. We offer lots of education. We'll get to that. And of course, have to mention, we do not provide any tax, legal, or investment advice. This webinar, along with all of our others, are for education purposes only. So, good to throw that out there. So we'll get going. All right. So, what is a self-directed IRA and why should you have one? So, self-directed is really just a marketing term, and it means that you are in the driver's seat. You tell us what you'd like to invest in, and we help facilitate that transaction for you. So an IRA is an IRA is an IRA, governed the same way by the IRS. Just self-directed means you get to tell us what you'd like to invest in. Some benefits there: diversification. You're not just investing in the stock market with regular stocks, bonds, mutual funds. You're getting to pick these assets yourself. Tax savings. So we have traditional IRAs with some tax deferred savings, meaning you'll pay those taxes when you start taking distributions. A Roth IRA, really cool product there. You can actually have tax-free distributions at retirement. So get in touch with our IRA specialist. I'm an IRA specialist myself. I'm one of the newest ones to the team. I do have a history of 401k administration, and now I'm kind of on the private side. So it's fun to be on this side. I've had a great time with since my time at Quest. It's been an honor to be here. So get in touch with us. We'll help you decide, kind of. How we can explore these products for yourself. Social investing. Not everybody can get like a regular mortgage from the bank. So some of these like private lending investments, if you will, can help somebody get a mortgage, and you can help people in your local community. And then, of course, invest in what you know best. So if you're a realtor, you know a lot about realty, oil and gas, mineral rights. You're into lending, you have that kind of education, you get to invest in kind of what you know. So we don't have time to go into all of these accounts, but we do feel that we probably have something for everyone. Again, contact your IRA specialist to see how we can work with you, what would be most beneficial for you in your situation. We do have the personal plans, the traditional and the Roth IRA, plans for employers, plans for self-employed people, and the specialty plans for the health savings and the education savings accounts for your kids. So contact us, let us know. So April 15th is coming up around the corner. Wanted to let you know that you do still have time to get those 2020 contributions in. So again, contact us. We will be happy to help you, let you know how you can get those contributions in still for 2020. And of course, you're already eligible to make those 2021 contributions now. So just a little slide up there about how much you can contribute. We'd be happy to help you with that. Endless free education, just like coming here every Saturday at noon Central. Free education, we'd love to help you with that. Um, Lots of resources that we have for you. Our YouTube channel, really building that up there. This webinar that you're watching now, along with all of the ones that we have, are placed on our YouTube channel under the videos tab. You can always go back and watch these webinars if you missed it or if you joined late. Our education center on our actual website. A lot of great articles, a lot of great webinars there. We have our weekly webinars every Tuesday and Thursday at 12 Central that you can also join as well. And then our virtual networking happy hour. This is a really fun event that Haley Gant has really built up. 6:30 Central, first and third Wednesday of the month. And these are people from all over the country now that we're virtual. So we usually have about 50 to 80 people come to these events. Everybody will get a turn to come on the screen, share what they're doing, see what they're looking for. If they're looking, for real estate, multifamily, borrowing money, wanting to lend money, what have you, come have a glass of wine with us, come have a beer with us, come check it out. It's a really fun event. So looking forward to see you there. Of course, Self-Directed Saturday, you're here with us now every Saturday at 12 Central, another exciting topic with another wonderful speaker like Brad. QuestCon Live is coming up. So I would say the majority of our events are free. This one happens to be a paid one, but this one is more high level content. We have a lot of speakers coming. I think it's about 20. Brad is going to be a speaker actually at QuestCon Live. This is our private lending edition. So some really great content coming up. The tickets are in pre-sale right now. I know Miss Sarah is going to put a link in there for you. Sarah Shellum is on here with us, moderating for us. So all of this great information I'm giving you, the links are going to pop up in the chat if they haven't already. So that's April 16th and 17th, a big 2-day event. Make sure to join us there. We have a great promotion going on. So if you refer someone to Quest or if you are being referred to Quest, you win both ways. So the person that refers you to Quest gets a $50 credit to their account, and the person that gets referred that's opening the account gets $50 off for opening the account. The promo code for that is double rewards, and make sure you're putting the person that referred you in the little box that's there on our application. And again, contact an IRA specialist. We're absolutely here to help you with that. All right. So how to get in touch with us? We're very easy to get in touch with us. We have our QR code there. Hold your phone up to it. You can get in touch with us there. We actually have a live chat box, 8:30 to 5:30 every week. I'm on there Tuesdays and Wednesdays. I'd love to help you out. Our phone number, I love that it has fun IRAs. We really do make retirement planning fun. We'd love to help you out. Give us a call. Email us, IRA specialist at questtrust.com. If you'd like to get in touch with me personally, nicole.baco at questtrust.com. So that's up there for you. We'd love to help you, help you out. And that is all I have. So I am going to turn it over to Brad Sumrok, the speaker and the man of the hour that we've all been waiting to hear. Thank you so much for joining us today, Brad. How are you doing?
Hey, I'm doing good. Thank you, Nicole. That was a great overview of Quest Trust and a great introduction. And man, I'm excited for all these people to put Brad Sumrock down so I could earn thousands of dollars in referral fees. That's
We'd
exciting.
love that. Yeah.
I'm kidding. Well, who's ready? Who out there is ready to learn about apartment investing? Because we got, hundreds of people on today, and I feed off of your energy. So if you're ready to learn about why you want to be investing in apartments, learn my 5-step framework, get an overview of my top markets for 2021 for investing in apartments, blow up that chat box right now and let me hear from you, folks. Seriously, who's ready?
We're ready, Brad. We're ready. All right, take it away. We can't wait.
All right. Well, let's get, okay. I see some, are the attendees able to put that in their chat box too, or is that just the panelists? Okay. I see Jairo Henao. Is that Michelle Brock, Edwin Kindred, Chris Valanis. Where are you all from? Who's from, type in, some of you type in where you're from. I saw somebody from New York. Let's rock. Some rock, some don't, by the way. And you guys freaking rock. I see Derwin King, John Evans from Detroit, Steve Franklin, Indiana, Houston, LA, Detroit, Atlanta, Houston. All right, well, let's go. So before I start sharing my slides, I just want to give you a quick overview. I mean, I got lots of slides, probably too many. I'm going to be talking to you for pretty much about an hour. I'm going to try to finish a little bit before an hour. And what I want to talk about is apartment investing. So how many of you are already investing in apartments? If you're investing in apartment buildings, anything 5 units and up, or whether you're a GP or like a syndicator, or whether you're buying apartment buildings with your own money, or whether you're a passive investor, please put it in the chat box so I could see, is there anybody right now listening in already investing? All right, I see Shreya. Hey, Shreya, you were in my Invest in Apartments challenge. I see some people that are LPs, active investors. Okay, great. Because what I'm going to talk about is how you can, and yes, you can, invest in apartments this year in 2021. And I know that you can because I did back in 2002. My first investment was not a single family home. It was not a duplex, fourplex, sixplex. It was actually a 32 unit apartment building, a 32 unit apartment building. And since then, I've done over 6,000 units. And my passion, however, is teaching and helping other people because, like many of you, I was taught to study hard, get good grades, go to college, save my money, save for retirement. And I worked in corporate America for 17 years. I was fired. I was laid off. I was told I wasn't good enough, smart enough, didn't have what it takes to be in management. And then I read the Rich Dad, Poor Dad book, totally blew me away, wanted to be a business owner and an investor. And 19 years ago, I made the decision. See, success is about making a decision. I made the decision to be an apartment investor. I didn't ask how. I just had a very strong why. And my why was I got to get out of this freaking corporate rat race. Okay. I got to replace my $10,000 a month of W-2 income with $10,000 a month of apartment investment income. And I was able to do that in 3 years. And so because I never forget how that felt to be able to walk away from corporate America after 17 years of honestly hating my every day, Monday through Friday, working for the weekend and waiting for over the hump day for that Wednesday happy hour like Haley does every Wednesday, by the way. That's over the hump day, right? I remember those days. And I spent 17 years like that. So if I could help you get out of that rat race, and you know what? If you love your job and you just want more income, more freedom, more security, because your job isn't secure. And that's one thing we learned about the pandemic. We really found out a little bit more about security, financial security during the pandemic, didn't we? So I'm going to share my screen. I'm going to tell you my story. I'm going to give you my framework. I'm going to tell you about what to expect for 2021 investing in apartments. And I'm going to give you guys an opportunity to come and mentor with me for 3 days. That's what we're going to do for pretty much the next 50 minutes. Okay. So you guys ready to roll? I'm ready. All right. Well, let's go. I'm going to share my screen. I already covered some of the things that I might talk about. So here we are, self-directed IRA Saturday. Thank you so much, Quest, for having me on. I'm going to get right into it. Let's talk about a recap of 2020 nationally in the apartment investing in the apartment sector. And then I'm going to give you an overview and a forecast for 2021. See, in 2020, we lost almost 10 million jobs net. We lost over 22 million due to the pandemic, but more than half of those jobs have came back, but we're still down 10 million jobs. But if you look at occupancy, it only went down 60 basis points or 0.6%. Occupancy nationally is 95%. Rent nationally only went down 1%. And this is nationally, including some markets that have been decimated, in some of these markets that are still closed down today. Okay, if you're in Texas and Florida, we're two of the most open states, and our markets have performed really well, better than these averages. So these averages are across all markets in the United States, okay? And the thing is, if we look at the rents that were collected compared to 2019 versus 2020, it's only down 1.1%, 96% in 2019 and 94.9% in 2020. So all the stuff you heard about rent strikes, eviction moratoriums, these things have had little impact in most markets. Now, there are some markets where people have been decimated, okay? But the markets that I'm teaching to invest in for 19 years, which are the Sunbelt markets that are landlord and business friendly and job growth and population growth, these markets have done real well. Markets like Phoenix, Atlanta, Dallas, Austin, Houston, Denver, okay, they've done super, super well, okay? And if you look at the bottom two bullet points, the prices keep going up. Okay, it's counterintuitive. If you're sitting there waiting for the crash, you're going to be waiting a long time. Okay, people have been waiting for a crash since 2016. Okay, so apartment pricing is keeping going up, and now that we're printing money, right? We're printing money to stimulate the economy. It's going to cause real asset value to go up, inflate, because the value of paper money is going to go down. It's going down. So you want your net worth to be in real assets, not in paper assets. Okay, if there's one thing that you take away from, whether you do apartments or not, whether you train with me or not, is you want to have your assets in real assets, not paper. Okay. If we look at the 2021 forecast, we're going to gain another 3.7 jobs. And by 2022, we'll be back to the pre-pandemic levels. The strongest job growth is going to be in the A class, that white collar. The occupancy is just going to go down another 40 basis points, 0.4%, but that's because of all the new product coming online. And then rents are going to continue to eke up this year, but they're going to be higher than they were in 2019 back in 2022. So things are going to be on the upswing for multifamily. And unlike office and retail and hotels that got decimated during the pandemic, that's why a multifamily is even stronger now than ever before, because these investors, ranging from the institutions all the way to people like you and me, we're looking for yield, and they ain't getting yield in retail, office, and hotels. And so they're coming, more and more capital is coming into multifamily. And that's why you want to be in multifamily before it gets prohibitively expensive and before the yields get too low. And right now the yields are still great. I study all the different research reports and companies that do research, from CoStar to RealPage to Yardi to CBRE to Berkadia to Marcus and Millichap. Everybody out there is forecasting rent growth especially in 2021, but I mean, especially in 2022. So again, as rent goes up, the value of the property goes up. And if you're sitting on the sidelines, the price goes up. So you want to be getting in now. So what do I see for apartments in 2021? I don't see 1031 exchanges going away. I don't see the Democrats removing them. I see them printing money. I see them raising taxes up to 40%, but not, substantially. The bonus depreciation that's available for cash investors is still going to be in play for 2 more years. There's opportunity now like there's never been before. Maybe there's been opportunity in B and C class, but I'm seeing opportunity now in A class. Interest rates, they have eked up a little bit, but they're still remaining really low. I mean, The Fed has already stated they're going to do everything they can to keep the interest rates low, to keep the economy growing, especially after the pandemic. The big deal here is the institutions are raising billions. That's B, with B as in Brad, billions of dollars. And they want to put it in real estate, multifamily real estate. So those of us that own real estate, multifamily real estate, our value of our assets are going to go up because they're printing money and there's more demand for apartment investing than there is supply. And that's why you don't want to wait. Okay. That's why you want to get in now before these institutions start pouring billions of dollars in there. But the thing is, all markets are not equal. And you got to know what you're doing. And that's why I'm passionate about an event like today. And I'm passionate about QuestCon, which I'll be speaking at. And I'm passionate about my upcoming 3-day event where I'm going to teach you the fundamentals, the 5-step framework to be a successful apartment investor. Okay. And so those that own and invest in 2021 are going to make money. I guarantee it, if you follow the right process and you know what you're doing. Now, there's always a chance that you could lose money if you make poor decisions and overpay and invest in bad markets and you don't know what you're doing. But those that are informed and educated and build a team around them and follow the framework that I teach and I'm going to talk about today, you're going to stack the odds in your favor to make money. Okay. So my premise to you is this. If you're sitting on the sidelines waiting because some guru who had 1 or 2 apartment buildings and now has a podcast or a website, or they're doing a seminar and they're telling you to sit on the sidelines, I'm telling you, I've been doing this 19 years. My mentors have 15,000 units, 13,000 units, 10,000 units, and 20,000 units. Those are the 4 people that I look to. And they're doubling down right now in multifamily. So I'm doubling down in multifamily. And I'm telling my top students that pay me $30,000 for mentoring, we're doubling down in multifamily. Okay, just to be clear. So this is the time. So I mentioned this to you before. Why do I teach? We're in precarious times. People are living paycheck to paycheck. This is before the pandemic. The majority of Americans are living paycheck to paycheck. I was one of those people. The majority of Americans are not secure. They don't feel secure about their retirement. I was one of those people. Now, since the pandemic, especially millennials, which I was a millennial. And when I was a millennial, I was living paycheck to paycheck. Okay. So I'll never forget. This was my story. Carnegie Mellon, grew up in Pittsburgh, studied engineering, got an MBA, tried to climb the corporate ladder, never got high up in the ladder, was fired, laid off. You heard my story, wasn't good enough, wasn't smart enough, didn't work hard enough, didn't have what it takes. Okay. In fact, if you look at the tuition from where I went to college, this year, it's $57,000 for 1 year. And then you add in room and board and all that kind of stuff. It's like $77,000 to go to school to a private university. Just say 75,000 times 4 years. That's $300K. So you can get a $70,000 job. $300K. Go into debt, $300K. So you could get a $70,000 job. But yet the same people do that, and they're like lemmings going over a cliff. They're like, oh, I ain't going to a $97 seminar. You guys, it's a ripoff. What is he going to teach me? It's crazy what we've been taught. It's crazy we have been taught to go into debt to get a degree so we can get a job, but we're not willing to invest 3 days of your life in a seminar that could change your life. Robert Kiyosaki said it best. Formal education will earn you a living and get you a job. Specialized education can make you a millionaire. Okay. So how many people are with me so far? Like, I want to see this chat box blow up. I mean, are you resonating with what I'm saying, or am I just blowing smoke up your, you know what? Seriously, I want to check in with you guys. Let's see. Anybody in the chat box? All right, great. You guys are with me. Awesome. Okay, well, we're going to dive in now. Okay, we're going to just keep going. So let me show you a little bit about what I did. I mean, some of you know me, some of you don't. So right now I own over 3,700 units. I have 18 properties right now. My cash flow is over $1 million a year. I've sold 16 properties. In the industry, we call that going full cycle. And I've owned and bought and sold over 2,700. So if you add up 2,700 and 3,700, it's over 6,000 units. And I've returned tens of millions of dollars to my investors over 19 years. And these are just some of the pictures of my deals. Okay. I've paid zero taxes 3 years in a row. How many of you pay taxes? If you pay taxes and you don't want to pay taxes, blow up the chat box. Okay. And by the way, by using your IRA, this is another great strategy. Okay. This is a picture. This is not the first real estate investment that I ever made. I already told you the first investment I ever made was a 32-unit apartment building. This was a house that I grew up in. So I wasn't born with a silver spoon. My dad made like $42,000 a year. Okay. And like I said, I was taught study hard, get good grades, save money for college, go to college, get out of college, get a job and start saving for retirement, stay out of debt, diversify your investments, don't take a chance, don't take risks, be safe, be logical, be reasonable, be reasonable, keep your head down. Well, nobody I know that's successful is logical, reasonable, and keeping their head down. Okay. So if you want to be successful, you're going to have to be a business owner and an investor unless you could climb up that ladder and become a C-level employee for a big company. That's my mom and dad. They were my first set of mentors. That's what they taught me. Study hard, get good grades, go to college. And I give them a lot of credit because it could have been a lot worse. I could have been addicted to drugs, or I could have went to the army, or maybe didn't go to college and not have a job, and then, live with my parents until I was 30. So they got me going on the right direction. And these are some of the things they taught me. Be good, play by the rules, get good grades, work hard, save your money. If you don't have the money, you can't afford it. Money doesn't grow on trees, Brad. Go to college, become an engineer. I was specifically counseled. My dad had 3 years of engineering school, never finished his degree. I was specifically counseled to be an engineer. Any other engineers here right now? Let me see if there's any engineers on the webinar. I'm sure there are. Let me look at the chat box. Yep, I knew it. Engineer, computer science, Venkat, Gerardo, Jeff, Alan, Jim. You got it, man. And you know what, though? I don't know if you love it or you don't love it, but whether you're an engineer in marketing, if you have a good job, if you have a college degree, if you're not where you want to be, you can be exactly where you want to be by investing in apartments. Okay. For me, it all started by reading Robert Kiyosaki, and my mindset changed. This is the first part of my framework, by the way, is changing your mindset. And if you're sitting here thinking, Brad, I don't need to change my mindset, you're the one that probably needs to change your mindset the most. I'm always working on my mindset. I mentor personally with Grant Cardone. We pay six figures, and I go to Grant Cardone not to learn about apartment investing. I go to have an expansive and exponential mindset. To truly think 10X means if I just think about growing my business by 20%, it doesn't force me to think out of the box. If I think about growing my business 10,000%, I got to start thinking, well, who do I need on my team? How am I going to grow 10,000%? How am I going to take my revenue from 10 million to, 100 million? How am I going to hire, go from 4 people to 40 people on my payroll? That is the mindset that I'm learning. So you always got to be working on your mindset. What I learned from the Kiyosaki book that made all the difference is be a business owner and investor, not an employee. Invest in assets with cash flow. Okay. The rich don't work for money. They work for experience. They work to get the experience and the connections and the network. And then when they have money, their money works for them. Debt is your best friend. Okay. Invest in specialized education, not just formal education. Me and my wife, we spend 6 figures a year going to seminars. Tony Robbins, Grant Cardone, Peter Diamandis, exponential mindset, longevity mindset. Okay. Anything we want to learn, we go to seminars and we follow people and pay people lots of money that are at a level in their life in that area that we want to be at. That's the formula to success, is you find somebody that's doing or living in the way that you want to live and have them mentor you. Okay, that's actually the shortcut. If you're looking for the shortcut, it's not a free blog on Bigger Pockets. It's finding somebody that's been there and done that to mentor you. Okay. So these are big things that I learned from Robert Kiyosaki 19 years ago that are still true to this day. Now, I already talked about this too. All successful people that I know have a very strong why. They have passion. They're obsessed. They have a desire. They're not playing safe. They're not logical. They're not reasonable. Okay. Name me one person that you admire, somebody that you admire that's safe, logical, and reasonable. I can't think of anybody. Everybody that I admire has passion. They're obsessed. They have a burning desire, to do something. Okay. And that draws me to them. It wants me to be like them. So my why was very strong, and you need to have a why. And my why in 2001 was to exit the rat race in 5 years or less so that I could live life on my terms, to have cash flow pay for my lifestyle so I never have to work unless I want to. And people say, well, Brad, now you do seminars and mentoring and you buy apartment buildings. Yeah, but that ain't work for me. I love doing this. Okay. And I am living my life to the fullest right now. So my financial freedom number back in 2001 was 10,000 a month. So let me ask you, do you have a number that if you made that number every single month from your investments, we call passively, even though it's not passive because you got to learn something and invest in your education. But if you had that investment income so that you could walk away from your job, what would it be? If you could put it in the chat box, let me know, what would it be? What is your financial freedom number? And let me read some of these. Let me see if I could find the chat box here. 10K a month, Alan. That was mine, buddy. And if I could do it, you can do it. Shreda, 8K a month, 20K a month, 40K a month, 20K a month, 10K a month. All right, man. Well, look, you can do that. Okay. 8K a month, 9K a month. These numbers are all achievable. Now, I saw somebody here has like 100,000 a month. Well, if you got 100,000 a month, man, that means that my question to you, Aaron, is, are you making 100,000 a month already? Okay. So I'm not asking you what your dream income is, and maybe you are making 100,000 a month, but I'm asking, what is the income that you need to replace so that you can maintain your current lifestyle without having to work? And that's your first number. Okay. I mean, my first number in 2001 was 10,000 a month. I mean, now I couldn't get by on 10,000 a month right now. Okay. I couldn't. So it only took me 62 units to retire. That's a picture of my first building in Houston, Texas, Pasadena, Texas. Put about 4,000 a month in my pocket. That's a picture of my second deal. It put another 4,000 a month in my pocket, also in Pasadena, Texas. Okay. So within 62 units, I was able to become financially independent from my job. And fast forward to now, this year in January of 2021, I closed on a 620 unit deal. The purchase price was $123 million. We raised $43 million and got an $80 million loan. It blows my mind. Okay, it blows my mind that in 2000, before I read Rich Dad, Poor Dad, I had been fired from a job and I thought about going to law school. Seriously. So much. That was in 2000. Now it's 2001. Now it's 2021. So much can happen in 20 years. And look, 20 years of your life is going to go by either way. And you're either going to grow incrementally, you're going to stay the same or grow incrementally, or you're going to grow exponentially. So if you want to grow exponentially, I want to help you do that by starting big in the beginning, by starting big with apartments in the beginning. So let's talk about apartments. There's 3 ways to invest. Okay, 2 of them require working with other people. If you're in a group purchase, which I call a syndication, you could either be on the sponsorship side, which is also called a GP, general partner, or you could be on the passive investor side. And by the way, if you have a self-directed IRA like I do from my job, I use my self-directed IRA to invest passively in deals. Okay, so that's a great opportunity. And that's why Quest and Sumrok, and I use my name in the third party to reflect my company name, not my personal name. But Quest and Sumrok have a great relationship because me and my students are buying hundreds of millions of dollars worth of apartments every year. And a lot of that equity is coming from self-directed IRAs. Okay, it is. So I'm going to just give you some rules of thumb here. Okay. So let me just put these up here. So I want to give you some rules of thumb about how we doing so far. Is everybody doing good? Let me just check in with you guys. Are we doing good? Are you guys good? Are you guys with me? Because I'm going to start going in through some of the numbers. Okay, I'm going to dive into some numbers. So these are all guidelines, by the way. These aren't promises or guarantees. These are rules of thumb based on what's happening right now and based on my 19 years of experience. But the example I'm going to give is a $10 million deal. Now, that might sound like a huge deal, but just remember, you don't have to have all the money to do this yourself. And I'm going to talk about that. But if you buy a deal by yourself, to get a $10 million deal, you need $3 million down. And if you don't have investors, then that $3 million is coming out of your pocket. So you need $3 million down and you get a $7 million loan. Now, I'm going to assume that we can make a 10% cash return per year in all of my examples. So if you made 10%, that's $300K a year. I'm going to assume that we sell at the end of year 5 and make another 50% return. So if you put $3 million down, a 50% return is 1.5 million gain. Okay. And if your $3 million down is cash, then you'd have depreciation savings. Okay. So the rule of thumb is if you buy a deal with your own money, you need 30% down. And over 5 years, you should pretty much double your money. 5-year return, you should pretty much get a 20% average annualized return and get a double your money in 5 years. That's the rule of thumb. Okay. So what I'm giving you here is rules of thumb. Now let's talk about if you're a passive investor. Okay. If you're a passive investor, I'm going to use the same 100-unit deal, but this time as a passive, you're going to put 50,000 in, and this 50, and it could be 10,000, 100,000, 25,000. I'm just using 50 as an example. If you put 50,000 into this deal into a $10 million deal as a passive investor, and let's assume that the general partner is going to take a 20% split of the profit. So now the GP gets 20% of the cash flow and the sales proceeds, which is typical. And then the passive investors get 80%. So if you're a passive investor, instead of getting a 10% return, you're going to get 80% of 10%. So that's an 8% return. And then when you sell, you're going to get 80% of the sales proceeds, okay, instead of 100% of the sales proceeds. So if you're a passive investor, you could expect about an 8% cash return, and you could expect an 80% total return or a 16% average annualized return. So that's what you could expect as a passive investor, okay, passive. So if you buy your own deal with your own money, you're going to get about a 20% average annualized return. And if you're passive, just think about, well, if I'm passive and it's the same deal, then the deal sponsor or the general partner, they got to get paid. So they're taking a cut of the profit. So hopefully you're following me there. So same deal, same returns. And if you own the deal yourself, you're getting all the returns. If you're a passive investor, you're splitting the returns with the general partner. Does that idea make sense? If it makes sense, just say, yeah, Brad, it makes sense. Okay. So hopefully that makes sense. Let me check in on the chat box. Okay, good. Now, look, I know I'm going fast. And if this is your first exposure to multifamily, then, I mean, look, I got 19 years here and I got 1 hour today. So I'm just giving you big picture concepts of what you can expect. Okay. Now, if we look at being a GP, and by the way, my question is, if you want to make more money than this, say yes. If you want to make more than doubling your money in 5 years or an 80% return in 5 years, if you want to 10x your money, tell me yes, Brad. I want to really 10x. And by the way, I know I'm referred to 10x and everyone knows Grant Cardone, but here's the deal. You know, Grant talks about 10xing your money. And what does he invest in? He invests in apartments. What do I invest in? Apartments. If you want to 10x your money, then you want to invest in apartments. And you want to be the GP. You want to be the deal sponsor. I use GP and deal sponsor interchangeably. So if you're a deal sponsor, you're going to make 5 to 20 times more. 5 to 20 times more. So you're going to make a return on your money just like a passive investor does. But now you're going to get carried interest, which is an additional return based on your experience and services that you're providing to the partnership. Okay, your leadership, you're finding the deals, you're analyzing the deals, you're overseeing the deal, you're raising the money, you're getting the debt, you're overseeing the asset, you're managing the investors, you're handling the disposition and the refinance, if there is any. Okay, you should get a monthly fee to manage the asset, and you might even get an acquisition fee. So again, if you're new, I'm not, I don't have 24 hours to teach like I do in my 3-day workshop coming up, but just know the big picture is if you're the GP, you're going to get paid 4 times. You're going to get paid 4 different ways. If you're the passive investor, you're going to get paid one way, and that's the return on your investment. If you're the GP, you're going to get additional fees for putting the deal together and managing the deal and handling the deal. Okay. And so these are just examples of how you would get additional compensation as the GP. So if we look at that same 100-unit deal, and this time, let's say I'm the GP and I only put in $50K. Now keep in mind, I still need $3 million to buy the deal. And if I'm the GP, I put in $50K, that means I need to raise money from other people. So you need to follow SEC laws. You know, you'll probably do a 506B syndication or a 506C syndication. I'm not here to talk about that today. Okay, I don't have the time. But you're going to follow SEC laws. You're going to raise money. Part of that money is going to come from people that have self-directed IRAs, by the way. Okay, and you're going to teach them how they can make a double-digit return, invest in passively, which is a great opportunity. But let's say you're the GP and you put in $50K and you also get a 20% split of the deal. So you're going to earn your 8% return like a passive investor, plus you're going to earn 20% of the profit each year. And then you're going to get your return at the sale, plus you're going to get 20% of the profit at the sale. And then you're going to have probably an acquisition fee, and then you're going to have an asset management fee. So when you add all these things up, and by the way, you could take screenshots of these so you have the numbers. But if you, as a GP, and put 50,000 in over 5 years, you can make almost $900,000. I'm serious. Like you can make almost $900,000 by taking 20% of the profit and you do all the work. So being a GP is not passive. You are an active investor and you're working hard to find deals, analyze deals, raise the money, manage the asset, manage the investors, handle the disposition, handle any insurance claims, handle any problems that comes up. But it could be very lucrative. Okay. It could be very, very lucrative. So I see some questions coming in, and I could we could do the questions at the end, right? Right, Nicole. I think we'll do Q&A at the end.
Absolutely, Brad.
So, yeah. So and by the way, you know, I know that I'm going fast here for some people, and for some people that are experienced apartment investors, maybe I'm going too slow, but not to be too self-promotional. But that's why I do a 3-day workshop. But I want to give everybody here, and I know there's hundreds of people tuning in, but I want to give you guys the big picture of the opportunity. So what we've covered so far is what to expect as a passive investor versus putting a deal together as a lead syndicator or a GP. And I showed you how you could 10 to 20x your money by being the GP. Okay. Now, the next thing is, I don't want to brag, but I just want to show you a real life example. These are 2 deals that I sold. I was a GP, and I put in like 100 grand into each of these deals. So I didn't put in 50, I put in 100. And I had a co-GP. So I had that 20% split. I split that. That was split 3 different ways. Okay, so I was a 1/3 GP. And then there were 2 others. So I put in 100 grand, and you could see on February 5th, 2020, we sold 1 deal, and that 100 grand gave me an $887,000 return at the sales proceed. And then there was another deal that I sold in February 20th, that 100 grand, I had $801,000 in sales proceeds. So I got an 8x return, 8x, but I split that with 2 other people. So if that was just me, it would have been a 24x return on my money. Okay. But when I GP deals, I like to have partners because I don't want to do all the work myself, honestly. And I like to run my education and mentoring business. And that takes time. So the one thing I learned, and you need to learn too about multifamily, it's a team sport. You can't do everything. Okay. You can't do everything yourself. So you're going to want to find partners. You're going to find key providers. You're going to want to find attorneys and lenders. And, you know, you have Quest to help you with your IRA and plus all the free education that they do, like today's event. I love it, by the way. Okay. But the passive investors do really well too. So this was a passive investor, and he put in 50K into the same deal. I put in 100, got 800 out. He put in 50 and got like 90 out. And with his 90, he went out and bought a $90,000 truck. Now, I don't drive trucks, and I didn't even know they made trucks that were $90,000. But apparently they do. And this is like a $90,000 heavy duty truck that's got all the bells and whistles on it. Okay. So look, you can do well either way. But if you're a passive investor, it's passive. That's the beauty of being a passive investor, is it's passive. So that's why I take my IRA when I have a 401k, when I had a job, I roll it into Quest. I still have like 300K from corporate America that were in 401ks, and I've rolled those into self-directed IRAs, and I invest them, and now that money is growing and doubling and tripling, okay, over the years, doubling and tripling over time by being a passive investor in apartment buildings. So the question for you is, how are you going to start? And, you know, do you have at least 50,000 to invest? And look, there's nothing magic about 50,000. Do you have 50,000 to invest? That should get you into most deals as a passive. And it should get you could also be a syndicator, a GP. If the answer is no, I'm going to say, are you sure? Because I've been doing this for 19 years, and I have noticed that most people have at least 50,000 if they dig deep enough. They have stocks, they have bonds, they have mutual funds, they have a home that's sitting on equity. They got IRAs and 401ks that maybe they didn't realize they could use to invest. They have parents and relatives that might be able to, you might be able to get money from them. Okay. So I don't want to say it this way and be like salesy, but you owe it to yourself to invest money so that you could live the life that you deserve and become financially free. So whether you have to work a second job or whether you need to borrow money from your parents or your grandparents or get your home equity out. I mean, if you're following Dave Ramsey to be debt free, you're never going to be rich. You might be secure and you might not have any debt where you don't owe anything to anybody, but you're never going to get rich by being debt free. Okay. It's not going to happen. Okay. So you want to do an inventory and see where you could come up with some funds. Now, once you find 50,000 to invest or more, or you already have 50,000, now you got to ask yourself, am I willing to be active investing? Am I willing to commit time, energy, money? And I'm going to be finding deals, analyzing deals, securing the debt, raising the money, managing the deal, dealing with the investors, handling the disposition, handling any issues that came up. If you own properties in Texas last month or this month, you may have had some problems with like broken pipes and water leaks and stuff. And guess who deals with those? The passive investors don't deal with them. The general partners deal with them in coordination with their management company partners. Okay. So if you're not willing to come and look, don't lie to yourself. Do not lie to yourself. Please don't do that. You all have the time. I have students that are full-time employees, mothers of twins. I have a student of mine that's a mother with twin 4-year-old boys, a husband. She's got a demanding job. How do I know she has a demanding job? Because she works for me full-time. She works for me full-time, and she's got twins, and she's married, and they travel, and she's an apartment investor and a syndicator, and she puts deals together. So you have the time. The question is, what are you willing to commit to do? Okay. So if you're willing to commit the time, the energy, the money, if you're not, then you should be a passive investor. At least start there. Now, if you're willing to commit the time and the energy and the money, and you have a database of investors, or you're willing to get a database of investors and be able to and learn how to raise money from other people, because that's another skill set. That is another skill set. If you're not willing to raise money from other people and be SEC compliant and get a securities attorney to help you with this and to learn the skill set of raising money, then you should also be a passive investor. But if you are, or do your own deal, by the way, or, you could commit time, energy, and money, but you could do your own deal too, instead of being a passive. But where you're really going to 10X is by being a syndicator, being a GP. And this is where you will 10X your returns. Okay. If you do it right, this is the secret. This is the step. This is the framework. Take a picture of this slide, decide how you're going to start, make 2021 your year. So let me see how we're doing here, because I have more content, but I don't want to run out of time. And let me jump ahead here. So how's everybody doing? And Sarah, how we doing on time? Because I got a few more things that I want to talk about.
We have about 6, and we do have some questions as well.
Yeah. So what I'm thinking of doing is let me wrap up here. I'll wrap up. I'll take the next 10 minutes to kind of do an overview and a wrap up. And then I could go through the questions in the chat box and answer any questions that people have. Does that sound good?
Sounds perfect.
Okay, great. So what you want to be doing is you want to be setting targets. Okay. You want to be setting financial targets. And the financial targets that I do is I set targets for cash flow. So we talked about that financial freedom number. That is how much cash flow do you need every month to live life on your own terms and be financially free? And then some of you shared me that number, 10,000, 8,000, 20,000 a month. So if you see, there's 3 darts in the bullseye. So dart number 1 is your cash flow. Dart number 2 is your net worth. Your net worth is the value of all your assets minus the value of your liabilities. And you want your net worth to go up. So when I showed you my bank account, right, and showed you how you could 10X your money, and you put 100,000 in a deal, and 27 months later, I get 800,000 back. my net worth went up by 700K. Okay. And that happened twice in February of 2020. And that's just 2 deals. And I have 18 of them. Okay. So you want to have cash flow targets, you want to have net worth targets, and then you want to have tax targets. Because I was at a point where I was paying $1 million in tax, nearly $1 million in tax, and now I'm paying 0 in tax. So the 3 keys to becoming permanently wealthy is cash flow, net worth, and taxes. You want to minimize or eliminate taxes. You want your net worth to go up. Okay, if you have your money making 2% a year and you follow the rule of 72, it takes you 36 years to double your money. If you're a passive investor making 16% average annualized returns, you should double your money in 4.5 years or 5 years, 4.5 years. If you're a GP, you should be 10xing your money in 5 years, 10x in 5 years. Okay. So I'm not here to brag, but this is how 19 years ago, after 17 years of corporate America, my net worth was 700K or 500K. And now it's over $40 million. And it's over $40 million because I've been investing in apartments for 19 years. And most of the deals I'm in, I'm a GP. But by the way, I do all 3. I buy deals with my own money. Okay. And I get depreciation. I buy deals as a GP, so I 10x my money, and I invest passively so that I could diversify my investments and get a great return, because I can't buy all the deals out there, and I'm only looking in a few markets. I'm looking at a very narrow niche. I'm looking in a few markets for my deals, and I'm looking at a specific property size. But I got hundreds of students out there that I've mentored and trained, and they're buying all over the country. So if they find deals and then numbers look good, then I invest sometimes in these deals. Okay. So I do all 3. I invest passively. I buy my own deals with my own money, and I syndicate as a GP. And so those 3 strategies help me reduce taxes, have cash flow, over $1 million in cash flow, pay no taxes, and my net worth just keeps going up exponentially. Okay. So my mission is to help you and millions of others achieve financial freedom by investing in apartment buildings. And we follow a proven process that I've done and continue to tweak and fine tune over 19 years. And the cool part of this business is we're not just making money for ourselves, our families, and those that we love, and our investors, but we're making the communities that we buy, which a lot of them are working class communities, where we're improving the living conditions of the people living there. Okay. So what I like to say is, here at Sumrok, we are changing America one property at a time. And my students have bought over 350 apartment buildings, totaling over 30,000 units. And if you add up the price of all of these 350 buildings, it's over $3 billion, $3 billion. And there it is there. Over 300 buildings, 30,000 units, 3 billion volumes, raised $1 billion in capital, 30 US markets. And over 200 of my students are now multimillionaires directly from investing in apartments. Okay. So, this is a little video here. Let me go ahead and play this. It's 2 minutes.
I embraced Brad as a mentor nearly 7 years ago. Since then, my wife and I have been able to grow our net worth from just about $400,000 to over $5 million.
I joined Brad's Sumrok program 3 years ago, and this was truly a life-changing experience for me. Since then, I was able to invest in 1,600 doors. I also sponsored several deals. I also was able to increase my net worth by $1 million. This helps me to live my life on my own terms.
When we met Brad, we had absolutely no experience in multifamily. And since that time, we have purchased over 4,800 doors, which represent 31 complexes. And we've been lead sponsors on 4 of those deals.
We were able to triple our net worth from $1.5 million to $4.5 million in last 2.5 years. Because of Brad, we were able to send our elder one to the private college, which we never thought before.
So as one of the original members in Brad Sumrok's program, I'm very pleased to say I've
increased my net worth by over $1 million directly from investing in apartments, which he taught me the ins and outs of. I've been able to invest in over 2,500 doors. I've sponsored my own deals. Bought my dream car. I can spend more time with my friends and family, and it's just been the ride of a lifetime, and I'm just looking forward to more of it.
So guys, that goes on and on. So here's the bottom line. I want to mentor you for 3 days. Okay. So if you like what you heard today and you like my teaching style and you like the content and you want to go deep in everything that I've talked about, and I am staying on today to answer your questions, but obviously we're going to run out of time. So March 20, March 19, March 20, March 21, 3 days, 8 hours a day, 24 hours. I'm going to be able to dive deep into everything we talked about and so much more. Okay. I'm going to go in detail about my 5-step framework, mindset, getting ready to invest, the things that you want to focus on. Okay. Getting your house in order. Okay. Finding deals, analyzing deals, funding deals, raising money and getting the debt. And how do you get the debt? Okay. To buy these large deals. And then what is all the steps you need to do before you close a deal? The due diligence and your business plan and forming the entity and hiring a property management company. So I cover all that and more in a 3-day event that I call Rat Race to Retirement. And the reason I call it Rat Race to Retirement is that that's my personal story. Okay. I was in the corporate rat race and I retired, and hundreds of my students have done the same, and you could do the same too. Okay. So that's the deal. I already talked about some of the things I'm going to talk about. And by the way, there's hundreds of people, over 500 people are already enrolled. And so it'll be an online and virtual experience. And so not only are you going to learn the content, but you're going to be able to network and start building your team, start building your investor database. You'll meet some of my providers, including Quest will be there. And everything that I went through today, and I did a free invest in apartment challenge that some of you were on it. So all those topics and everything I talked about today is going to be happening and more in March 19, 2021. So the good news and bad news is we have a limited number of in-person tickets. Those are sold out. Okay. We're doing the event in Dallas, and even though Texas is opening up 100%, starting next week, the hotels aren't there yet. Okay. And we're doing it at a Marriott. They're still looking to guidance to their corporate location. And we've already, the event's already set with the seating and the F&B, the food and beverage and all that. So we can't unravel that right now and have hundreds of people there in person. Okay. But the good news is you could still attend virtually. And you could attend from the safety, the convenience, the comfort of your home, watch it in your pajamas or in your shorts and a t-shirt, and you could still network and get all the sessions. Okay. So virtually we have 2 options, and they're really affordable. I mean, if $97 is going to stand in your way to even potentially learn something that can make a difference in your financial future, why wouldn't you do it? Okay. So the money shouldn't be the object. And if you look at the $97 virtual, I've worked with Quest. We've partnered with Quest, and I'm giving you a bonus more than the cost of the ticket. So you buy the $97 ticket and you get free admission to the QuestCon event. And I don't know, I think their early bird pricing on that is $69. And if you open an account with Quest, we're giving you $50 off. So, okay. So this is something that I've worked with Quest. And so you attend my event, you buy the $97 ticket, you go to QuestCon for free. So you get a 2-for-1, plus you could open an account with Quest for $50 off. And then if you want the virtual experience or the VIP experience, you get even more value where we do planning sessions. You have VIP lunches, and those VIP lunches will be, you'll be virtually in the room with the in-person people when we're having lunch and have panels and stuff like that. Okay. So I encourage you at least do the $97. And you know what? Somebody told me, they're like, but Brad, I can only do 2 of the 3 days. So I'm going to wait till next time. And I'm like, are you nuts? Like, coming for 2 days out of 3 is better than waiting until July. Okay. Waiting waiting is perhaps the most toxic word for people that are successful. Successful people don't wait. Okay. If you don't wait 4 months, if you want to do something, and the reason I'm saying 4 months is my next event will be 4 months from March. So waiting is toxic. $97 is less than like the cost of a dinner with a cheap glass of wine. Okay. So I want to make this affordable to everybody. And we've worked with Quest so that you get back in bonuses more than you invest for your ticket. Okay. So take a picture of the QR code, get yourself enrolled, come and let me mentor you for 3 days. And there it is again. If you want to take a screenshot of that, it's on Eventbrite. You could go to my website too, but bradsumrock.com. But this way is going to help track that you came from Quest, so we get you the bonuses. Okay, I want to get you the bonuses from Quest, and so I want you to use this this registration site here on this screen. And then I'm not looking in the chat box, but are you guys at Quest able to put up that? Are you guys able to put up that link in the chat box?
We sure did.
Okay, awesome. So I'm going to stop sharing my slides, and it's been about an hour since I was introduced, Nicole, and so I'm right on time, and I'm wrapping up, and now I'll stay on as long as you let me to answer questions. So what you guys want to read them to me, or you want me to, how do we want to do Q&A?
Sure. I'll let you know some of the ones that came up. So our first question, our accountant said that passive investors using funds from an IRA don't get to take depreciation deductions. Is this accurate?
Well, I think it is accurate. And I know we have Quest IRA specialists on there because I heard it come up when Haley spoke at our Invest in Apartments Challenge. And so you guys may have some additional information to add on to that. But yeah, my understanding is an IRA does not get depreciation, but what it does get is you didn't pay tax on it when you put it into the IRA account. So it's already a tax advantage vehicle.
We actually do have more information on that. And there are some situations where you might be able to take depreciation. So contact us and we can talk about it. Another question that we got is about living on the actual property that you're investing in to take advantage of any tax benefits or lender discounts.
No.
Okay.
No. We're buying properties as an investment. That's like the bigger pockets, like house hack, buy a duplex, live in one side, rent out the other. I mean, we're buying like 60, 80, 100 unit buildings. And look, I bought an A-class building in Houston. Many of you are in Houston. I own the City Center building over there in West Houston, the Domain and the Lofts and City Center. It's 620 units. It's right there in City Center. Maybe I would live in that building, but most of the buildings that I live in, that I buy, I don't want to live in. Okay. They're
right.
Yeah. So no, you don't want to do that. Live where you want to live and invest where you want to invest.
Sure. Another question we got in the Q&A box is, what is the typical cap rate for a multi-family deal? And I know we can't really give investment advice, but maybe just general information on that.
Yeah, look, I mean, the average cap rate, if you look at all the studies that I review, like Berkadia, Marcus & Millichap, CoStar, CBRE, the average cap rate nationally for apartment buildings is below 5.5. It's somewhere between 5 and 5.5. But cap rate is just one thing that we look at, just like asking what the price per door is. So what I look at is what return am I going to be able to get on the deal based on not only the current value or the current cap rate, but what I could do to the property. So how could I add value? How could I raise the income and optimize the expenses? So I didn't go through that today, but the formula for valuing an apartment is it's NOI divided by cap rate. So if I could raise the NOI by raising the rent, raising the occupancy, optimizing expenses, I'm going to drive up the returns. So I don't buy on cap rate. I buy on what I know I could do with the property based on my 19 years of experience. And that's what we do with our students is we help you put together, not the broker's pro forma. We help the buyer, the investor, put together their 5-year business plan for the property. And that's what I buy on, not cap rate.
Perfect. Thanks so much for that. We have a couple questions here about business plans in purchasing these multifamily properties. Can you speak a little more on that about creating a business plan and how that would fall into starting investing into multifamily?
Oh, yeah. Could you still hear me?
I can still hear you.
What happened to my video? Let's see if I can get it back on here. Well, it's not picking up. So let me, yeah, so I'll keep talking and maybe my video will pick back up. I'm not sure what happened. The business plan of every apartment building is the same. It's to raise the NOI. Okay. So ultimately what your business plan is I have a 5-year property analyzer and it's going to show the projected rent increase every year. It's going to show the projected other income increase every year. It's going to show the projected expenses every year. And so what we're going to do is we're going to piece that together. And when we're looking at buying the property, we're going to be able to look at, well, what's the current condition and performance of the property? And then we're going to study the market and identify comparable properties. And we're going to determine where we could take that property. So essentially the business plan is going to be, how much could I raise the income by raising the rent, by raising the occupancy? And what is my expense projection going to be on a line item by line item basis? And that's really your business plan. So like we help people do that all the time. I'm going to change my camera here and see if,
we can see you.
I changed the camera to my built-in camera as opposed to my fancy Logitech Brio camera that was sitting on the top of my PC of my MacBook. And I don't know what happened to it. It just bugged out.
All right. All right. Well, thanks for that answer. We're getting a couple of questions that are kind of related in some way to finding a property and kind of what to look for when you start investing in multifamily properties. What to look for?
Well, okay. So what I look for is, and that's a good question. So that's part of my framework is you want to set your criteria so that, like, for example, the last property I did on my own, I had a certain amount of equity in my bank account. And that amount of money was about $4 million. And so with $4 million, I knew I could buy a property between 12 to 16 million. So I was looking for if someone sent me something below 12 million, I'd say, no, it's too small. And if they sent me something above 16 million, I'd say, no, it's too big. So like part of the framework that I teach is you define your criteria, and your criteria is going to be, well, where am I going to invest? What market makes the most sense for me? And I could give you my top 20 markets, but at the end of the day, like I have a student that lives in Chicago and he didn't want to travel that far. So his markets are like Indianapolis. Chicago's not a landlord and business friendly market. So he's looking in Indianapolis and Columbus, Ohio. And then I have other students that are looking in Jacksonville and Tampa. And some others are looking in Atlanta, and many of them are looking in Dallas and Houston, and some are looking in Salt Lake City, Boise, and Denver. So I'm going to give you a roadmap to pick, where you should buy, what size you should buy, what your financial goals are. And again, part of the framework is coming down to what is your why? What are your SMART goals? What do you want to achieve over the next 5 years and why? And then you start looking at properties. And so many people don't do that. So many people just start looking at deals, but they're not dialed into their goals. They're not dialed into what they want to accomplish and why. And my coach, I pay Tony Robbins a lot of money for his masterminds, but I have a Tony Robbins coach, and she's like, everything I do, she's like, Brad, what's your outcome? Before you just start taking action and going down that path, stop for a second and let's figure out what's your outcome. What do you want to accomplish this year? What do you want to accomplish in the next 5 years financially? And as much as I'd like to think apartments is going to be, like 100% of everything you're doing, just like me, but for some of you, it's going to be a piece of what you're doing.
Sure.
So, it's going to be, hey, I'm going to invest, I got $500,000 liquid and I'm going to take 100 of that and do multifamily. And so you look at my decision tree. How do I start? Do I want to be a passive investor? Do I want to be a sponsor? Do I want to put deals together? And so by, and again, I'm answering the best way I can, but the answer is it really depends on what you want to do and how fast you want to do it and how much time you're willing to commit.
Perfect. Thanks so much. You said a sentence that I found really interesting. If you could speak a little more on this, that I think it was debt is your best friend. Can you speak a little more on that, please?
Yeah, because look, well, just a couple things. I mean, number one, I was taught, you don't go into debt. Like when I was a kid, if you don't have the cash, you don't buy it. But then I'm being told go to college, and I don't have the money to go to college, so I'm getting out loans. So any of you that took out loans to go to college, you already got into debt so you could get a degree and get a job. And we're I don't want to say brainwashed, but we're conditioned that that's what we do. But then somehow, there's the Dave Ramseys of the world that are telling you don't go into debt and, pay off your house and pay off your cars and buy an old car and drive it for 12 years and be the millionaire next door. And if you look at anybody rich, like on the 620 unit deal that we bought, we have there's 5 of us that guaranteed the loan, but we have an $80 million loan. Now it's non-recourse and there's no personal liability. Okay. On the $13 million that I bought with my own money, I put $4 million down and I have a $9 million loan. If I don't get that $9 million loan, I can't buy the deal. But the deal is giving me $400,000 in cash flow on one deal, 150 units. I'm getting $400,000 in cash flow. But if I don't buy that deal, I can leave that $4 million in the bank, but it's just sitting there and my paper money is going down in value. I put it into a building. I'm getting $400,000 a year that I could spend, but that $13 million building, that $9 million is the bank's, $4 million is mine, but that $13 million building is going to be worth $20 million at some point. And I get to keep the profit. I don't have to give the bank their share. The bank is not an equity investor. If it goes from 13 to 15 million and I get the $2 million profit, I don't have to give, if the bank gave me 65% of the money, I don't have to give the bank 65% of the profit. I'm paying the bank 2.4% a year. 2.4%. So debt is your best friend. Like it's like free money. And it enables you to go out and make money where you get to keep the upside.
Perfect. Thanks so much for that. I think we have time for one more question. It's kind of related to what a couple of people are asking about finding investors to either partner with or just working with other people in this business in general. What do you suggest as far as due diligence goes and finding these people to work with? Either other investors or, passively or not so. What are some due diligence suggestions that you may have?
Well, so we're talking about due diligence on people. So there's due diligence on properties, right? If we're buying a deal, even a single family rental, you have an inspector. We're buying an apartment building. We do due diligence. We go through all the units. We check the roofs, the ACs, the electrical, the plumbing. But so many people overlook the due diligence on the GP team. So if you're a passive investor, or even if you want to be, a co-GP where you're going to have other people that are going to share those responsibilities, you need to get to know these people. And the way you get to know them is it happens organically over time too. It doesn't just happen. It doesn't just, you meet people online today in virtual events, you meet people in person, but you don't want to just jump into a deal. You want to spend some time getting to know and trust these people. And if they already have deals, you could ask them, well, how have your other deals performed? And let me see some examples of your current properties, right? How many deals have you owned? How are they performing? Can I see the financials? Can I get a summary of this deal that you bought and sold and what returns did you make to the investors? Okay, now, the catch-22, truthfully, is if you ask too many questions and like take a guy like me, for instance, I got 3,000 people in my investor database. I got 3,000 people that already know me and trust me. And when I go to do a deal, I bring it to these 3,000 people and my deals feel up like that. So if somebody doesn't know me before and they start asking me, 30 questions, I'm going to say, I don't have time to answer that. I'm already full with these 3,000 people. So it's true. So you got to balance that. So, but the thing is, the people that invest with me, they've gotten to know me over the years. A lot of them are my students. They come to my seminars, they get to know me. Maybe they've been following me for 2 or 3 years. They see that I'm still in business. They see that I bought a deal. They see I returned money in the deal, that I sold it. And then they're like, oh shit, I should have invested in that. And then they start getting more comfortable. So I'm not saying to wait 2 or 3 years, but this is another reason why I do these events. Okay. Because when you come to a Sumrok event, even virtually, we're all on the same journey. We all want to do apartments. We're all committed to learning. We all taken 3 days out of our lives, and we're all on the same journey to become more successful in apartment investing. Whether you're just wanting to be successful or you want to become more successful. And so like attracts like. You want to have proximity to the people that are doing what it is you want to do. And that's what you get to by coming to a Sumrok event, is you're going to start meeting people. And yeah, you got to vet them. I don't know everyone that's going to be in my event. There's going to be over 500 people virtually there. I don't know all these people. You got to vet them. But what you do know about them is they have the same commitment that you did, and they sat through 3 days of education, and they're committing to upping their game and leveling up and improving their lives. And then it's up to you to figure out, well, who are these people and what is their intentions? And then you check references. Like Nicole, if I was going to invest with you, I might say, hey, has anyone here invested with Nicole? I could do it on a Facebook post. Hey, if you invested with Nicole, let me hear from you, and I'll talk to people that invested with you.
All right, perfect. Thanks so much. And just before we wrap up, what would be your one golden nugget of advice to everyone listening? Not even necessarily in multifamilies, but just your one piece of advice, maybe in just in investing in general, or just your last piece of nugget of knowledge.
Well, you always want to be learning. Okay. I mean, one of my mentors is Tony Robbins. He has a acronym called CANI, and it's CANI, stands for continuous and never ending improvement. So you always want to be learning. You always want to be growing. I've seen Robert Kiyosaki at seminars. He sits in the front row and he takes notes. And it amazes me how, to me, the most successful people, the people that I admire the most, and the people that I study under are always learning. They read books, they go to seminars, they learn, they pay attention, they're always expanding their team. And so, whether somebody chooses for me to mentor them or not, I would love the opportunity to mentor everybody here, but always be learning, invest in your education, invest in yourself. And don't stop learning. Just keep learning.
Perfect. Thanks so much. So we do have a ton more questions that I know we didn't have time to answer. If people want to get in touch with you to consult with you or ask any more questions, do you have a contact information that you'd like to share that we can put in the chat box for you?
Yeah, I'll let me go ahead and do it here. So there's an email, support@bradsumrock.com. I just put that.
Perfect. Thanks so much.
And then I'm on Facebook and IG, and I actually spend a lot of time there. It's one of my vices. I probably look at my screen 5 hours and 27 minutes a day. And if you send me an instant message, I'll probably be more likely to respond that way than like somebody that emails me.
Okay, perfect. All right. Well, thank you so much for, yep.
Oh, the other one is my website, obviously. Like if you want information about our company, our programs, we just like you guys at Quest. By the way, I have free education too. Everything I do doesn't cost money. I got like a free 6-hour course. I got a $97 home study. I got the $97 3-day event coming up. We have like mastermind programs. So like just go to Brad Sumrok and they can check everything out.
Perfect. Well, thanks so much for coming today. We loved having you here on Self-Directed Saturday. That was amazing information. Thanks so much for sharing. I'm sure a bunch of people are going to reach out. If you want to get in touch with us here at Quest, you can reach us at iraspecialist@questtrust.com. If you'd like to get in touch with me personally, well, I'll put this in the chat box as well. Nicole.baco@questtrust.com. I'll spell that out. It's kind of a weird spelling for my last name. And this video will be on YouTube right after this. I know we had a lot of questions about will we get a recording, etc. So if you go to you can just Google Quest Trust YouTube. We'll put the link in here too. This recording will be on there with all of Brad's great information. So thanks so much for everybody for joining us on this Saturday. We loved having you, and I hope everybody has a wonderful weekend.
Boom. Thank you.
Thank y'all so much. It was wonderful having y'all today. All right. Have a great weekend, everybody.